Hello, beautiful people. How are you doing today? I hope you're having a great day. It's a beautiful day out here, and in today's video, we will be discussing the introduction to crypto trading. Meanwhile, please ensure to watch this video to the end, as I will be reviewing tips for staying profitable in crypto trading. Just in case you don't know, my name is Richard, and I want to welcome you all to my channel. Thank you very much if you've been watching my videos, but if this is your first time watching my video, please subscribe. This is the subscription button. Please click on it, subscribe, and also click on this bell and select all so that you can be able to get notifications each time I post any video on either crypto arbitrage, dollar arbitrage, or how to make money online or offline, or review on any platform at all. YouTube, this channel we cover a lot of things. Then please also like this video so that YouTube can recommend this video to other people. So that was the end of your time. Let us quickly jump into the introduction of crypto trading. Crypto trading refers to the act of buying and selling of crypto assets for profit. Cryptocurrency coins and tokens are the financial instruments being traded. Trading can occur on centralized exchanges, on decentralized platforms, as well as on peer-to-peer setups. Good crypto traders have the ability to buy crypto at desirable prices and sell at profitable prices later on. The ultimate goal of every trader is to secure profits from their trades over a short or long period of time. There's a difference between crypto trading and investing in crypto assets. Crypto trading differs from investments made in crypto in several ways. Investors in crypto buy crypto assets with the goal of holding it for a very long time. They aim to hold until its value appreciates over time before they can sell. Sometimes, when they receive dividends for holding, they never want to sell off everything. Alternatively, crypto traders buy crypto with the goal to sell as soon as they see enough profit. How soon this happens depends on their trading strategy and grade level. They also use risk management to cut losses immediately when trades goes wrong. Crypto investors decide what to buy majorly by conducting a close fundamental analysis on the instrument. Fundamental analysis involves taking a close look at several factors like an asset market capitalization, total supply, distribution, and many others. This works best when their goal is to hold for a long time. On the other hand, crypto traders rely on technical analysis to help them make better decisions. Technical analysis helps a trader to study price actions from the past. This makes it possible for them to predict which direction the price of the asset will go next. Long-term traders can also rely on fundamental analysis in combination with technical analysis. But investors have no need for technical analysis as they are not focused on price actions at the moment they are buying. Crypto trading can take place on a centralized or decentralized exchange. Beginners are encouraged to start by trading on centralized exchanges as they provide a more user-friendly interface that makes trading easier. On the other hand, decentralized exchanges offer you more control over the assets you are trading, but beginners may find it difficult to use. There are two common ways you can trade crypto instruments, and they are: number one, spot trading; number two, derivatives trading. This type of crypto trading involves buying an asset to hold briefly and sell later when in profit. Both crypto traders and investors use this to buy and sell crypto assets. Spot crypto trading makes you the owner of any asset for which you have paid the price. The trade settlement happens immediately the bid or ask price is the same as the current market price of the asset you are buying or selling. Bid price refers to the price you want to buy. Ask price refers to the price you want to sell. The market price is the current price of the asset in the market. The trade settlement happens immediately the bid or ask price is the same as the current market price of the asset. Bid price refers to the price you want to buy. Ask price refers to the price you want to sell. The market price is the current price of the asset in the market. I have to repeat this thing again so that you will understand it very well. Spot trading can occur in both centralized and decentralized exchanges. On decentralized exchanges, trades are fulfilled instantly, while you can decide how soon your trade is fulfilled on a centralized exchange depending on the order type you use. This type of crypto trading can also be called an over-the-counter trade. Let us discuss the derivative crypto trading. This crypto trading type involves trading on crypto derivative products. This does not mean you are buying the asset itself. Rather, you are trading on derivative contracts. Common examples include futures contract and options trading. The most popular type of derivative trading are the futures perpetual contracts and its inverse contracts. Both of these involve buying a contract on a crypto asset price movement. These contracts are only used in predicting the direction of the price of the crypto assets. You do not own the actual asset. You can only own the margin you use to purchase it. These contracts can be a long or short position. When you buy a long position contract on an asset, you are simply predicting the price will go up for that asset. When you buy a short position contract on an asset, you are simply predicting the price will go down for that asset. Should the price of an asset go in your direction, you earn profits on the margin used to purchase the contract. For perpetual contracts, you earn more stable coins. For inverse contracts, you earn more of the crypto assets used as margin. However, if price goes the opposite direction, you can lose part of your money or all of it if care is not taken. Let us quickly discuss the crypto trading strategies. We can also classify crypto trading using the trader strategy. There are several types of strategies in use today. They are based on long-term or short-term a trader is willing to stay in a trade. Here are four popular crypto trading strategies. Scalpers. This type of traders open and close trades in a very short time, usually in less than 3 minutes. Traders can even open and close trades within seconds. Traders using this strategy take advantage of sharp price movements in a short period of time to make quick profits. Profits are usually small and insignificant for one trade in comparison to the margin used. However, gathering a stream of little profits this way can mean a lot to a trader. Thus, these strategies involve opening and closing hundreds and thousands of trades daily. Beginners in crypto trading are advised to avoid scalping. It can get them stuck with assets they bought at a loss if it's on the spot market. If it's on the derivative market, they may lose their entire margin to liquidation. Day traders. This type of crypto traders open and close a trade within a day. They are short-term traders who seek to profit from the price movement of an asset within a day. This trading style is borrowed from the regular stock market, where trades close at the end of the day. Though crypto trading is 24/7, these traders never leave a trade open to the next day. This is probably because lots of things can change overnight in the crypto market, especially as scalpers are most active at night. Swing traders. This type of traders leave their trades open for some days even weeks. They buy crypto assets or derivative contracts with the expectation that the price will change significantly to their advantage in a few days or weeks. They sell as soon as the price goes in their favor within the period, or as soon as they are satisfied with the profits they have earned. Position traders. This type of traders are the ones with the long-term mindset, similar to crypto investors. They always take advantage of cryptocurrency dips to buy assets they believe their price will bounce back over a few months. They can stay as long as it takes for the market to recover before they take profit and move on. Whether you are trading on the spot or derivative market, you can find a suitable trading strategy that works best for you. Very impatient traders go with scalping, but that requires having adequate knowledge of the crypto market. People who use this are full-time cryptocurrency traders. This is their day job. They are also good with technical analysis. Position trading is for the very patient ones. For them, trading is often only a side hustle. They look at both the fundamental and technical analysis for any assets they want to buy. Now let us discuss the tips for staying profitable in crypto trading. The following tips can help you stay profitable as a crypto trader. The most important thing about being a successful trader is gaining the needed knowledge before venturing into crypto trading. Having little or no understanding on how crypto market works before venturing in can bring you losses. In your quest to understand how the market works, you are expected to learn fundamental analysis and technical analysis. Knowing and using both analysis will help you make better trading decisions. A successful trader is also one who is not moved or controlled by their emotions. When you trade based on how you feel at the moment, you are setting up yourself to lose. Thus, you have to be in control of your fears and potential for excessive greed. Profitable crypto traders also have a good trading plan that they strictly follow. Changing your plan midway in a trade can deprive you of the gains. You may end up making the wrong choices of trade or miss opportunities. Additionally, knowing the right time to buy or sell can help you stay in profit too. This requires mastering the crypto fear and greed index. Buying when others are panicking and selling when others are foaming is a good idea. However, it all depends on the assets being traded. Finally, you need to have patience and stick to your trading plan. Patience is a very crucial factor as you want to stay profitable as a crypto trader. Thank you guys for watching my video to the end. Just in case you've forgotten, my name is Richard and I want to welcome you all to my channel. Thank you very much if you've been watching my videos. But if this is your first time watching my video, please subscribe to my channel, hit on the notification bell and select all, and also like this video and also share this video with your family and friends. Thank you guys and see you again in my next video.